Okay, I welcome all of you. Now you can see my screen. Yeah, audio and video quality is clear to all of you. Okay, great. Now today what we are going to learn is very basic of stock market. It's not really some technical thing, but it's very basic and very important to know. And most of the persons are unaware of this fact. Like what is support, what is resistance, what we have to do with these things. Okay, so basically I'm going to explain all those things to you in today's session. Okay, so before starting the session, I'd like to tell you that after attending the today's session, you will be clear about your thoughts. Actually, I have seen lot of people like they have not clear in their thoughts, like why they are trading and how they are trading. And if you are not clear with your thoughts, you would not be able to trade significantly. You will be still in doubts at every places. So it's very important to get clear in your thoughts, get clear in your actions, because whatever you think that programs your mind. Okay, and if you are doubtful, then your mind is doubtful, and your actions are doubtful, and so most of the people faces loss, or faces great difficulty, or sometimes in deep loss, and waste their money in the share market. But according to me, the place where you lose your money is the best place to get the money back. And if you are able to do, after losing, for example, you have lost 10 times in that place, and if you are at the 11th time you are managed to get the money back from that place, you will be feeling lot of confidence, you will be feeling lot of enthusiasm in yourself, and that will be like positive thing for you guys. So I have seen many traders who are confused like how to trade and what they want to achieve. But today, in today's session, I will try to make this crystal clear to for those traders who are new to this session, and for also to those traders who have experience of around 2 3 years or 5 years, because they have invested their time in trading. Yeah, am I clear? Okay, they have invested their time in trading, but they have not invested their time in engulfing the trading within themselves. How is that? I'll explain you. For example, how many of you traders know that how many types of trading we do? Some are like positional traders, some are like swing traders, some are short term, some are long term. But you have to be clear in your thoughts, like what do you want to do and how to do trading. That's why I bought this session to you. Now I used to get questions like which is the best time to enter in the trade. I come across this question mostly every day, and do reply them personally, but I think I should reply here also in this session, because since I do reply them personally, but I don't want to deprive all of you from that answer. Actually, there is no best time to enter in this trade. There is no best time. No best time to enter in trade. You can enter at any sort of time, at any point of time. Okay. So how is that possible? I'll explain you.
Please complete
Since
all it. Yeah,
why there is no
okay,
best
okay, all
time
set.
to enter.
All set. Thanks. So that much.
Hello, am I clear? Am I clear to everyone? Okay.
Got no number.
Okay.
Record करना. Okay. Record करना.
Please guys take notes.
It's under Simon.
Okay. Everyone can hear me correctly, no? Now no disturbance, right? Okay. So I was talking about the time to enter the trade. The thing is there is no best time to enter, or you can say like there is no best entry. See, today I am talking about which time you should enter. Okay. But there is no best entry. For those guys who understand Hindi or they are more comfortable in Hindi, let me explain it to you again in Hindi. Like अगर बहुत सारे लोग ऐसे होते हैं जो पूछते हैं कि हमें किस टाइम पे एंटर करना चाहिए, जैसे मॉर्निंग में, इवनिंग में, और मॉर्निंग 9:30, मॉर्निंग 10:30, मॉर्निंग 11:30 और आफ्टरनून 1:30, आफ्टरनून अराउंड 2:30. बट कभी ये ऐसा नहीं होता कि हम जब भी एंटर करते हैं, ये कोई गारंटी नहीं है इस ट्रेडिंग मार्केट में कि हमें प्रॉफिट हो. ओके. सो वो चीज़ जो प्रॉफिट देती है वो टाइम फ्रेम पे नहीं इंक्लूड करती है. ओके. आई विल बी बैक इन इंग्लिश. Actually there is no best time which gives you a profit, so there is no best entry in the market. First thing, just understand this concept that there is no best entry in the market. Okay. But few people actually they ask like which is the best time. It depends on what context you are asking about best time. For example, somebody is asking about car, which is the best car in the market. So it depends like on what context he is defining the best. For example, according to him, the best may be the car which gives you a greater mileage, or some person, for him the best may be the car which gives a good speed like Ferrari. But Ferrari cannot give a mileage of 15 or 20 liters per kilometer, right? Sorry, 20 kilometers per liter. Ferrari will give 4 5 kilometers per liter. And where it comes to Alto, or where it's come to a small cars like Maruti 800 or Nano, they give a mileage of around 15-20 kilometers per liter. So it depends, like on what context you are asking the best thing. So first try to figure out the context, try to figure out the clarity within you and your thoughts. Now, basically, if you see, like when do we enter in the market, there are two entries. Ideally, there should be two entries. If you type entry, there are two entries. One is pullback and other is breakout. Breakout. These are the two points where you can enter in a trade. So you should understand that whether you are a pullback trader or you are a breakout trader. But both of these points have benefits as well as disadvantages. What is the benefit of pullback and what is the benefit of breakout, and what are their disadvantages and advantages, I will explain you in detail. Pullback is something this. For example, I have support and resistance here. Trade is going this. So coming from down, coming from here, like here is the point, it is coming down. This is my pullback. And there is high chance that you miss the trade. Pullback, in pullback, you can miss the opportunity. Okay. There is high chance that sometimes you miss the trade. But in breakout, it is an advantage that you will never miss the trade. But another difference is in breakout you are prone to false breakout. False breakout. There are various false breakout you might not be able to understand, and you enter in the trade and you book loss. So you are more subjected to false breakout in here, and here you can miss the trade. So this is the advantage and this is the disadvantage for this. Let's go for second point. What is another thing? Okay, so like in pullback there should be something called as this. I have told you disadvantage. So what will be the advantage? In pullback you can have better risk reward ratio. R is to R is a good risk reward ratio in pullback. Whereas in breakout you can trail your stop loss. Trailing. Trailing stop loss. This is the advantage of breakout. Okay, so you understood like what is pullback trader and what is breakout trader, right? And these are the two entry points anyone can enter. But before entry you should understand like you are a pullback trader, you are a breakout trader. One any pullback trader cannot be a breakout trader, or any breakout trader cannot be a pullback trader all the time, right? Yes, I am a breakout trader, and as of now I am trying to learn pullback. Okay, so for example, you understood these two concepts, either pullback and breakout. But if somebody asks like what is the best point to enter in the trade, I cannot give you the answer exactly, because I cannot be both. What is pullback and breakout? You don't understand. Okay, let me explain you pullback and breakout first. See, pullback is something called as retracement. There are various words for pullback, and retracement is also similar to as pullback. For example, here this is a line, here this is a line. This is my R, resistance R. This is my support S. Okay, this is my support. How does market moves? Market moves from this point, this point, this point, this point, this point, this point, and similarly this. This is how the market moves. From here, ideally it should go this way. Ideally it should go this way, but it retraces. This retracement is called pullback. Have you seen an arrow, right? You put your arrow on the bow, pull back the string so that you restore sufficient energy to throw that arrow to a certain distance. So you are pulling back the thread. The same way I'm pulling back the thread, again boom, again pulling back the thread, again boom. This is the pullback. Okay. And now what is the breakout? I will explain you that also. Breakout is like, for example, this is my support and resistance. This is going up, going down, going up, going down, going up. Now for example, breakout means again it breaks the support and resistance and it goes up. So I'll be waiting here at this level. This is my breakout point. I do not trade in this level. This level I do not trade. No trading here. I will trade here. This is breakout. Understood? That breakout is a term refers to like whether it breaks some support or some resistance level and go to next support and resistance. Anybody have doubt? I think I have cleared the doubt of. Okay, when exactly we need to enter. I'll explain you at the end of the session. You will understand that when exactly you have to enter or when exactly it's better to enter. But you should, before getting this answer, you should recognize yourself as what kind of trader you are. Either you can be a pullback trader or you can be a breakout trader, right? I am a breakout trader. I consider myself as a breakout trader. Okay. See, I want money and okay, everybody in this market wants money. But there is a certain rules, certain kind of way to do things. We cannot do things on a random basis to get money, right? For example, there are a certain different, for example, let's see, there are different ways of doing work. If I practice one way regularly, I will be master in that. If I have to do that work, I can do that work in that particular style in any fraction of second. I'll be master in that. So try to be a master in one kind of trade rather than going for different strategies. So either you can be a swing trader or you can be a positional trader. There are two types of traders. Two types. One is swing. Swing. Another is positional. Okay. So what is swing trader and what is positional? Swing and positional are different things. Swing is same as pullback. if it is going up and down, I'll take this swing, I'll make profit, I'll take this swing and make profit. And positional is, I will wait at certain position and let it come at that level, then I will enter in trade. For example, here is two lines and I'll wait at here. When it breaks here, for example, the trade is moving like this, I'll wait in trade. When it breaks here, I'll enter and it will go to next support or next resistance level. Okay, and now here I'll make profit. Okay, so this is how positional trader works and this is how swing trader works. So you cannot be a swing trader and positional trader at the same time. So just clear your thoughts about what kind of trader you are. Either you can be one, and according to me, you should be one. You should be master of one. Rather than being jack of all trades, you should be a master of one. So this is how trading market works. So now every trader can have a pros and cons, right? For example, let's see. For example, I have two lines and my market is moving up and down and up and down. So being a swing trader, for example, if I am a swing trader, I will try to enter close to this level, close to this level, and I'll put my stop loss somewhere here. So my stop loss will be this much, right? My stop loss will be this much. But somehow I do not manage to get here. So if you are not clear about your thoughts and you see that the price will go up and again will come down, and if you are not clear about swing trader and positional trader, you see that price is rising up, it's high chance that you enter at this level, somewhere in this level. It's high chance you enter at this level, and now you put your stop loss at the here or here. So now you are putting a bigger risk. Now you have a big risk from this level to this level. This risk is more and your profit is small, which is not feasible according to me. Always the profit should be twice the risk. Okay. So now, according to me, what is if I am a breakout trader? This was for positional trader, and now I explain you like what is for breakout trader. This is my support resistance lines. Now breakout trader is, if I am the market is going this way and going this way. So sometimes it is going this way, up or down. But at a certain point, market will consolidate either here or here at upper or lower level. It has to consolidate. Okay. So if you are not clear that okay, either it can go down or go up, and if you are a breakout trader and if you are not clear in your concepts, it is high chance that you can enter it somewhere here and book a small loss or book a small profit. But there are 90% of the chance you book loss. Why? And why I want to enter here and why I prefer to enter at consolidation mode? Because see, support and resistance are the structures of market. They are the pillars of market. Okay, you have to understand these pillars very well. You have to go through this and you have to be crystal clear among these pillars. So now, for example, this is my support and this is my resistance. But for the time being, during this session, this has made a small support here. This has made another structure here, which is called positional support, or you can say immediate support. So what happens here exactly? What is the funda of this thing? Why this happens? I will tell you in detail why this happens. For example, this is my support. So here buyers are more, here sellers are more, right? So what happens here? Here the sellers are pushing it down, then even buyers are pushing it up. Again, sellers are making down and buyers are pushing it up. This consolidation comes in a market. But at that moment, at some moment, here buyers and sellers, for example, buyers has gone from this level to this level. Now sellers has got a small force. But now at any moment, if I put my buy order at this price, at here, somewhere here, and my stop loss just below this, below this. So now at any moment, either it can go down or it can go up. Okay. If it goes down, I have not entered in the trade since I have put my buying price at this level. Okay. But if it had gone up, so it has break its main resistance. This is its main resistance. It has broken its main resistance. Now there is high chance that it will go its to the second resistance R2. And if it break this, I'll enter in the trade and I'll exit just before R2. Understood? This is the breakout pattern. How does breakout traders work? Okay. And this can go even up. So in breakout thing, we can trail our stop loss. For earlier it was here, now I can trail it to my buying price. Now again, if it goes up, I can trail it to little above, little above. In this way, we can trail it to a certain height. Okay. So just be clear like what kind of trader you want to be. Either you can be a breakout or you can be a positional trader. Okay. Now the next thing, as I have told you, like I would clear about your doubts about support and resistance, or let's say what is the best time to exit the trade. Okay, I have told you like what is the best time to enter in the trade. Now I'll tell you like what is the best time to exit the trade. So see, the swing traders, for example, I will take I will explain you everything in detail in later session. Just try to clear your concepts first. What is swing and what is positional traders? What swing traders do exactly? Swing traders rely upon two things: high and lows. Highs and lows. For example, the trade is moving this way. This is my higher highs, and this is my higher lows. So swing trader rely on these things. Whereas because what swing trader do? They will short here, short here, buy here. This way they will earn the profit. But what does positional trader do? They do not work in this kind of market. They see the trend. They see the trend, like for example, this is going up and down, up and down, up and down, up and down, up and down. So positional trader will see the trend. For example, they can enter at any moment, at any place. For example, let's say they have entered here and they have put their stop loss here. Now it has gone down and gone up here. Now again it will go up, again it will go up, again it will go up till here. So what will they do? They will trail their stop loss from here to here. Again, if the price reach here, they will trail it here. Again, the price reach here, they will trail it here. If it is here, they will trail it here. Again here, again here. So this way, the positional traders work. They keep on trailing their stop loss. So if you are confident that you can trail your stop loss to that level, you can be a positional. Otherwise, if you are not confident, then you can put a target and a stop loss in such a manner that it comes in a swing and hits you in a, hits anything in a swing and gets off the trade. So another thing, what swing traders do. Another thing swing traders rely upon, Fibonacci extensions. Fibonacci extensions. I will explain you in another session. I'll devote one session for Fibonacci extensions. It's really good to understand the Fibonacci extensions, but that thing requires a lot of time, and I'll explain you. And another thing that positional traders rely upon is moving average. Moving average. And second is my structure. Structure is support and resistance. So moving average and structure, these are the two things where the positional traders rely. Like they see the moving average going this way, 50-day moving average or 26-day, they will buy at above the moving average and they will short below the moving average. Okay. And a structure, they will see the support and resistance level. Yeah, my classes are only on weekends, so I'll take session especially on weekends only. Don't worry about, since I am a trader also, so I don't have time on weekdays. I'll try to do on weekends. Okay. So understood, like how does positional trader and how does swing trader works. Now the concept is about support and resistance. I want to clear your concepts about support and resistance. And you might be laughing at the end because whatever the thing you read in your books or in videos or you can see anywhere, they will tell you same thing, like it should be tested again and again and again. And they say that if it is tested again and again, the support becomes stronger and stronger, whereas resistance becomes stronger and stronger, right? But this is the most wrong thing. Why? I'll explain you. And with correct logic. Before understand going to that, I'll try to explain you two terms. Two terms. First is undershoot. First is undershoot, and second is overshoot. These are two terms I would like to explain you. What is undershoot and what is overshoot? Okay, I will explain you in detail. Let's come to undershoot first. Okay, this is my support and this is my support and this is my resistance, right? You would have seen it is going up, any trade going, coming back to support and going up to resistance, back to support. And sometimes what happens, it has tested once, twice, again it has tested thrice, and again it comes and it moves from here. It do not touch the support level, right? Do not touch the support level. This is called undershoot. The price undershoot from here. It didn't touch the support level. Why it didn't touch the support level? That will That is the main point, and that is the secret of this thing. And what is overshoot? I will explain. What is overshoot? What is overshoot? Overshoot, for example, I have my resistance and support here, and my trade is going this way. Sorry, it got overshoot earlier. My trade is going this way, coming down, coming this way, coming down, and suddenly it goes up and again comes down. This thing is called overshoot. This is overshoot. Okay. Now, why this happens, that also I will tell you in detail, and you will understand the logic. And if you understand the logic, you will understand the market completely. This is the main thing of support and resistance. Now, some person tell like support and resistance is a line. So first clear the thing. It is not a line, it is an area. It is a area. Okay. So you have to plot a area on the chart. For example, if I said like this is my resistance and this is my support, this is not exactly a line. There should be one another line, this one, and another line, this one. This is my support. This area is my support, and this area is my resistance, right? If I fill it, so understood the support and resistance thing. So this is how the support and resistance work. This is my support and this is my resistance, and both are area. They are not a single line. So if you consider area in that case, then what will happen to the trade? Your trade is going up and down, going up and down. If it undershoots or overshoots, if it undershoots or overshoots, like for example it has gone above the support and comes down and goes down. So in this case, see here, your undershoot and overshoot part will be accommodated within your area. So that's why try to have a area rather than a single line for support and resistance. The thicker the area, those it is it will be harder for the trend to break that support or that resistance. Okay. Now next thing, number of how many times the support and resistance should retest that line to become support and resistance. I will explain you what is this. I have these two lines. Okay, let's go for an area. I have this area. Okay, or let's okay, rather than going for area, go for line. It will be easier to understand. For example, I have 1 lakh buyers and sellers. I have 1 lakh rupees, and I want to invest 1 lakh rupees. So if I'm a swing trader, what I will do, if the trade starts from, for example, if the trade starts from here to here to here, again to here, and again to here and to here. So what I will do in this scenario, I will invest my 30 30,000 here, right? Again my 30,000 here, again my 30,000 here, and in the fourth time I will have only 10,000 to spend, right? I will only have 10,000. So here I am buying 30,000, here I am buying 30, here I am buying 30, and here I am buying 10,000. So what happened to the volume? If we see the volume, what happened to that? Here the volume was of 30,000. Here is also good, 30,000, 30,000. But here the volume decreased. And what will happen if this 10,000 will become zero, or it will become even less? The price will not stand here in that case, because since all the orders of 30,000, 30,000, 30,000 already has been fulfilled by the sellers. Now here only 10,000 is remaining, right? And if this order gets fulfilled, what remains here? Nothing. In that case, this line or this trend will break the support and go down. This was my support. Here it will break. That's why it will break here. Okay? Got this concept? Okay. Similarly, not clear. Okay. Let me explain you again. For example, I had told you initially that I had 1 lakh rupees. I wanted to invest in a share market. Okay. Now, being a swing trader, I want to invest in every swing. So everybody wants to buy at near the support level, right? Everybody wants to buy the stocks near to support level. So I have placed my 30,000, a part of, let's say, one third part at this support. I have bought it here. Again I have placed another 30,000 here, another 30,000 here. And what end I have remain is 10,000. I'll place it here. So here I have 30,000. I bought it. Here I booked the profit. Again here I bought it. Here I booked the profit. Here I bought it. Again here I booked the profit. But here, what happens? Here are buyers. Here are sellers. At resistance level, there are a lot of sellers. So why the price is coming up and down? Because buyers are putting the buy orders here in this range, and sellers are fulfilling their buy order, so it is coming down, right? Here is 30,000 buyers and here is 30,000 sellers, or let's say 35 or 40,000 sellers. They are fulfilling the order to this level. That's why the price is coming down. The sellers are dominating the market in this region. But what happens here, like there are sufficient buyers at the support level, so the price were not going down. But since the support has been tested once, twice, thrice, every time the trend touches the support, the buyer reduces drastically. The buying quantity reduces because the sellers have fulfilled that level. So now, since the bias is reduced in every touch, for example, here I have reduced some buyer, here I have reduced, here also reduced. So now at every trend, the buyer is getting reduced at the support level. For example, if we see this support level, buyer is getting reduced, and so does the volume of the sellers gets increased at this level. Now what will happen? That if somebody fulfills this target, then this line or the support level will break through this. That's why the support level will break. Understood? Now similar happens with the resistance, breaking of resistance. Why it break the resistance? For example, the trend is going up, going down, going up, going down, and finally here it breaks. Why it didn't break the third K? See, 30,000 is a good figure. For example, here 30,000 was the good. That's why 30,000. Let's see if I have to break some what do you call log. So you would not be break a thick wood of thick piece of wood, right? But you can break a thin piece of wood. Similar happens here. Here it was 30,000 orders already waiting, so it didn't break, but finally here are only 10,000 which can be fulfilled. So it can happen that it can go at some level and it can break and go through this, right? It will not touch the resistance even in that case. Got it? Okay, now similar happens with resistance level. How? I'll explain that too. Okay, so trend is going up. Here there are number of sellers. For example, there are already 1 lakh sellers waiting to short or waiting to sell their shares. Here 1 lakh shares. So if the trend moves up, the buyers have agreed to buy at this level. What will happen? Some of the sellers get reduced here, and again the price come down. Okay, again it has gone up. Some sellers have reduced here, and it will again gone down. Again the trend goes up. Some sellers have reduced and gone down. Then what will happen at the end? At the end, this thing will happen. It goes, and then the market moves in a consolidation mode. What is that consolidation mode? I will explain you again. Consolidation mode is now at this level, or earlier the level of buyers were starting from this. Now it is going up this way and this way. Now buyers have also accumulated at this level and sellers are at this level. What will happen? If the buyers are more than sellers, in that case it will break this resistance. Cut. It will break this resistance and it will go up. And why it will go up? This is the thing. I'll explain this why it go up and how it gets momentum, how the market gets momentum after consolidation mode. Now this is like this. Okay. So see, now what will happen? How, why it goes out and why does breakout happens? That's what I was telling you, Aswin, that everyone should look at the volume every time. They have to consider the volume. Volume is a very important aspect of share market. But I'll take that volume session also and explain how does volume affect the market. Okay, everybody clear? Am I clear and loud? Okay. So okay, what will happen here? Here number of sellers are there. Okay, what will they do? They have placed their order here and their stop loss at this level, somewhere above the resistance. Now, how does this market breaks here and why it break? This is the concept. Why it break? Why it goes higher than the resistance? See, here are numbers of sellers and they have put their stop loss at this level, for example. Okay. So now what will happen? Like here are buyers are more and sellers are more. This is happening. If it breaks this resistance, I've earlier told you how it breaks the resistance. Now if it breaks this resistance, what will happen? This will triggers their stop loss. This will trigger the stop loss of sellers, right? And if the stop loss of sellers get triggered, means 95% of the sellers who have put their stop loss at this level will be forced out of the trade. This means the seller quantity reduces, and this brings the fuel to the buyer, and price goes up to another resistance. That's why price goes up. This is the concept. For example, have you understood, or do I need to repeat it again? Okay. Everybody, those who are attending this session, have they understood this concept? Yeah, yeah, okay. No, this doesn't happen at 12 o'clock or 3 o'clock. This happens after 12 o'clock. This happens around 1 to 2, between 1 to 2. Why sudden breakout occurs? That's what I told you. Why sudden breakout occurs? Here, for example, sellers have placed their stop loss, and suppose somehow the buyers have pushed it to this level only, not to very high level, to this level. Now, what will happen? This thing will trigger the stop loss of the sellers. And if this happens, if this happens, drastically the seller's quantity come down. The buyer's quantity does not increase drastically, but seller's quantity come down, and then as compared to sellers and buyers gets dominate the market and they take the price to a higher level. And similarly happens here. If the price is consolidated here, here sellers are more. Sellers accumulate here, this place. Earlier sellers were here. Now since the market has consolidated at lower level, sellers have gone down to this level. Now if somehow sellers have placed some buyers have placed their stop loss here, okay, and they have bought it here at this level, and somehow the seller managed to push it till this level. What will happen? The buyers will get out of the trade unnecessarily. Their stop loss will trigger, and then buyers quantity will reduces to a drastical level. And now what will happen, that if the buyer quantity reduces, sellers dominate the market in that case, and they will take the price down to another support level. Okay, so this happens why support and resistance works at that market. I think I'm clear to everyone in this thing. No, I okay. You, Anil, you have doubt, right? No, I didn't understood that. I am saying once stop loss hits, everyone buys and resistance breaks. Everyone does not buys. If it is at, for example, once it is here, if the stop loss hits, everyone do not buys. What happens? The seller quantity reduces, and if you compare the number of sellers and number of buyers, and if I reduce the number of sellers, okay, so what will happen? In, if we see in comparison view, the number of buyers will become more, and they will start dominating the market. Okay, this, so this goes up, right? So this was again a wrong concept that it support can be tested twice or thrice. This should not be there. And yes, and another thing was like area. If sometimes it overshoot or undershoot, it also triggers the stop loss. For example, it, like it was an somebody have, because 99% of the people do not consider support and resistance as an area, they consider it as a line. So what will happen? They put their stop loss somewhere in this level, in this mid region. They do not consider, since they do not consider it as an area, they will put their stop loss in this region. And what will happen? If it overshoots or undershoots, it will trigger their stop loss and then goes up, right? So in that case, number of this thing, yeah, buyers reduces drastically. since their stop loss got triggered. So understood all of you? Yeah. So let's move to another topic. Just remember two, three things like support and resistance is an area, and the more the number of times it gets touched by the price, the weaker it becomes because it is always fulfilling the order, right? It has to fulfill the order. Okay, I think I had cleared the support and resistance things to all. Okay, I got a question like I understood the concept, but I want when to buy or sell based on support and resistance. Yes, I'll explain this another thing. I have this two levels. One is resistance, one is support. And price is going this way, right? Going this way, this way. Now, what you have to do, for example, this is an area. Take support and resistance as an area. I have told you. So now, where you have to put your buy price? You have to put your buy price somewhere this region, right? And a stop loss somewhere this region. Then if it managed to get over to this region by breaking your resistance, your order will get trigger, and then if it your order gets triggered, just push your stop loss from here to your cost price. This minimizes your risk and you can go for profit. Similar happens at shorting. Similarly, if you want to short, you put your buy price just above your resistance, just above, and your stop loss here. Sorry, sell price here, stop loss here. If it triggers once, it will go down and you can book the profit. Okay. So this was all about support and resistance, and how to plot. Just practice it on your different charts. You can practice on the home itself. It can test 3 times, it can test 4 times. Like I got a question that do we need to test it? How many times it need to test? It can be, it can test 3 times, it can test 4 times, depending upon the volume, right? If the volume is in crores, it can test 5 times also, or it can test 3 or 4 times. But if the volume is in small thousands, it may happen that it can go down at second time also. So just have a look at the volume. At if the price is at the resistance level, see what is the volume, how many buyers and sellers, and again if it goes to again it's another time it comes to resistance level, again see how many buyers and sellers. If you compare these two data, like how many buyers and sellers here and how many buyers and sellers here, you will see like there is a huge difference. Okay, there is a huge difference in sell orders, because here already some sellers are sitting, they have placed their sell order here, that order gets completed. Again if comes here, here some more sellers, remaining sellers, their order gets completed. Now buyers are in like dominating the market, so they can push the price to up level, right? Okay, so just practice support and resistance thing, and you can have it. in your mind, or if you need to practice, like you can practice with previous day trading session. Like if you see the previous day trading session, there should be one support and resistance thing, and just if you are not getting confidence in that, try to put a line in the chart and go through that thing. Okay, so that's all for today, and if you have any doubts you can WhatsApp me on my number. Yeah, generally they gives three support level, but the price generally do not breaks the all the three. You see, if the price is at first support level, okay, and it has tested it twice or thrice, it can go down. So you can buy at any support, at first one or second one or third one. It depends like which support it is testing. If it is testing the second support again and again, you can try to buy at second support only. You can place your trade at second support. Yeah, can you talk of OCO orders, please? Yeah, sure, sir. I can talk about OCO order. Let me explain OCO also at the same time. OCO is in upstocks. OCO basically means one cancels the other. What happens in this? What happens in this OCO thing? Like you have to put your stop loss as well as trigger price. For example, if you have bought any share, okay, at some price, let's say 100 rupees. So you have a target of 3 rupees and a stop loss of 1 rupee, or let's say 2 rupee. Okay, I'll show you, just give me a second. Place order, right? Now if you see here, you can place OCO, right? Complexity, you can change the order type. There are four order type. AMO is after market order, CO is cover order, and OCO is one cancels other. Okay, now somebody have a doubt, like if I place OCO, it gets triggered at market price. It gets triggered at market price only when, if it is at market. If you change this to limit, it will trigger at that particular price. Okay, for example, I want to buy 100 quantities, so I typed 100 here. Now buy price, it's 183.25 here written. Now I want to buy it, for example, no, sorry, I want to sell it. Let's say I want to sell it for 182 rupees, 182. So I'll type sell price at 182. Disclose quantity means your order gets separated into 10 or 12 types if you want to disclose it at 10. So do not write disclose quantity, it's fine if you are not writing disclose quantity. And what will be a stop loss? For example, I want a stop loss of 185. As of now, I want to buy it at 182. I want to put a stop loss of 185. So 185 minus 182, that will be 3. Okay, I'll type 3. And what will be my square of buy? Square of buy is my target, right? So I sold it at 182. Now I want to put my target as 176. So 176 and 182. So 182 minus 176 will be 6 rupees. So I'll put a target of 6 rupees. Now what I'll do, I'll put a trailing. Either you want to put regular stop loss. In regular stop loss, your stop loss will be which one? Your stop loss will be 185. If you put trailing here, click on trailing, and if you click on sell, what will happen? If you click on sell here, now when the price comes down to 182, your order gets executed. Okay, then when it comes down to 181, Your stop loss, earlier stop loss according to this thing is 185. It will come down to 184. Again, if it comes 180, your stop loss will come down to 183. Again, it comes to 179 or 178, your stop loss will come down to 2 points. Similarly, stop loss gets trail and trail and trail. This is the stop loss trailing. And a square of buy is 6 rupees. Square of buy is your target. Okay. So in this way, we work. OCO work actually. And don't forget to put limit, because since you have put limit, your order will get executed at 182 only. It will not get executed at 183.25. No, Ashwin, you are wrong. You are wrong because since you have put the limit here, limit means you are limiting the price to a certain level. That is why limit orders are there. If I am putting the limit and it is getting executed at market price, so it may happen that it can happen in share Khan, but in whatever happens in upstock, I am telling about that. If I put limit and market price, this is the main difference between limit and market price, right? If I put limit here means it has to execute at 182 only. It will not execute at below or above. Stop loss limit, I'll tell you what is stop loss limit. See, stop loss limit is different thing. And if it is at market, it will execute at market price. See, you cannot have your sell order here. You cannot write, right? If it if you put limit, you can write your sell order at sell price, at for what price you want to sell it. So this is how OCO works. And somebody was asking, is this a 100% cash margin order? No, it's not a 100% cash margin order. You can get a benefit of around 15 to 20 times margin in this OCO also. OCO is a upgraded version of cover order actually.